Good day, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Wednesday. It's August 11th, and today we actually have a pretty big report from the Fed. We have the Consumers Price Index, and let me talk about the global economy. I'll give you the expectations, and I'll give you the full dynamics of the lay of the land. How does that sound, right? Pretty good, right? So a few factors, not a lot of factors, but major factors. The biggest factors: inflationary pressure, whether or not the economy is moving along too fast, same thing as inflationary pressure, give or take, and COVID and inflation. Those are pretty much it. So U.S. inflation data offers a glimpse at how the world's largest economy is recovering. We will know that in about an hour, 55 minutes or so. Analysts are expecting, and here's the headline, and here's the number you got to pay attention to. They're looking at inflation, and they're looking for the pace to slow down to 5.3%, which is slightly lower than June's 5.4%. And if you look here at the CPI, where we can get the full expectations, it'll take a second to load. These government sites are a little slow. But as you could see here, CPI year on year, 5.5, but this says 5.5, but the other one, and they could change overnight too, 5.3 to 5.4. The bottom line is anything around 5.3 to 5.5 will take. And on the month, which is not really all that, I mean, inflation on a month is kind of, it's not really that big of a factor. We're looking at 0.5. So again, that's what the target rate is, and that's what you got to pay attention to. Now, if the number comes out higher, better than expected, it runs the risk that the Fed will taper the program. If it's low, then the Fed can say, well, we're not running hot enough. So that's the factor there, and that's going to have the biggest impact on the bond market. And who told you when the bond market was huffing and puffing here and here and here and here that it was going to go down, that it's a fool's play, that interest rates are going to go higher, that we're going to break the 200-day moving average? I remember every day for the last 2 weeks I've been telling you that we're going to do it. We're trading below the 200-day moving average right there. That's the overnight data, and I think we're going to break lower and go back to the 139 level. So I think we're going to cool off some more. I'm just saying, I've been telling you this every single day now. Here's the part you need to know about. Where the price increases lie matters too. While the previous highlights were air travel fares, used cars, now we're talking whether inflation is going to dip into food and housing, which is going to be big, and it's going to put a damper on or pressure on food costs and housing. That's going to impact America a lot more than air travel and used cars. Do you guys see where used car prices have gone? Imagine that happens to the housing market, or it might have already happened to the housing market. Traders will watch for continued growth of food and housing prices. That's the biggest factor today on the report. The second biggest factor is the COVID Delta variant spread in the US and Europe. Over in Asia, the variant has resulted in travel restrictions being imposed in China. Parts of Japan, including Tokyo, the capital, remain under a state of emergency. Now, folks, you see this resulted in travel restrictions being reimposed in China. Well, the last time that happened was February of 2020. The prelude to the big meltdown that we had in the U.S. stock market was the airports around the world closing. I'm just trying to remind you of that little factor. So keep your eye on the COVID situation around the world, and keep your eye out on inflationary data. And by the way, just so you know, today we have Consumers Price Index. On Thursday, tomorrow, we have Producers Price Index. So today we're going to see how inflation is running, whether it's cooling off or running hot on a consumer level. And tomorrow we're going to get an idea of how it stands on a producer's price level, and we'll have the jobless claim. So by the end of this week, and then the import and export prices will put a little cherry on top of the whole thing and give us a good understanding of where inflation is right now and how the market should react. But in terms of the bond market, expect higher interest rates, because so far the Fed data has been better than expected, and it doesn't look like the Fed is going to it doesn't look like they're going to maintain this program for the full length. So if I had to guess, I would expect the number today on the Consumers Price Index to be better than expected. And again, the bond market, expect the bond market to go a little bit lower, which means higher rates, which means more pressure on the stock market. Speaking of stock market, I'm looking at the mid caps right now. The reason I'm looking at the mid caps right now is because between you, me, just between us, the mid caps represent the stock market better than the S&P right now. Because if you were to look at the S&P right now, you're basically seeing, and I don't want to talk more about this because I've been talking about this nonstop. You'll see a big divergence. Look, S&P makes all-time highs, right? But look at the equal weighted SPY. When you strip away all that market capitalization, it looks a little bit better, right? But it doesn't look like the SPY. So right now, with the earnings on the plate, I would be focusing on the mid cap right now. On the mid cap, this is a much better representation of where the stock market has gone, and it hasn't really gone anywhere since April. I mean, it's been choppy. I mean, really, really choppy. It's not that hard to trade this market if you're looking for little tiny gains, but if you're looking for outsized returns, this is definitely not the market unless you're trading those high flyers. Now, I wanted to look at the put to call ratio. Now, the put to call ratio, let me just make this a little smaller because the chart is just so damn big. There we go. So you could see this. Now, what does the put to call ratio? The put to call ratio tracks the sentiment. It tracks how bullish the market is becoming by how many people are buying calls in comparison to puts. So it looks at the ratio of puts to calls being bought. And without getting too advanced and without getting too technical, if the number starts getting below 75, that means the market's getting a little too bullish. That means greed is running wild. And usually when greed runs wild, below the 75 level, we reverse and head back higher. And typically when the level is at 95, 100, that means market's getting too fearful. And typically when that happens, it turns around. The put to call ratio works like a rubber band. Now, between you, me, and the wall, 90% of the time, it's random. But when it gets to these levels right here, when it gets to the these levels right here, I don't know what I did just now. Trying to put a circle here. I can't draw it to save my life. When it gets to these levels right here, that's telling us, that's really telling us that it's getting a little bit, market's getting a little too bullish, and notice it turns back, and we're getting towards those levels right now. So you've got to be really, 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 really careful, especially in light of the fact that the major sectors in the market, let me show you this here, they are still fragmented. Look at basic material and industrial next to each other. Look at technology, right? And look at consumer discretionary. They should be next to each other. They're not. I mean, you got financial, real estate, communication technology is good, healthcare is all good, but I mean, look at this. You got consumer discretionary at last place, and then you got technology all the way up here. So I'm going to ask you, is Apple a consumer discretionary company, or is it a tech company? Is Amazon a consumer discretionary company, or is it a tech company? So you see how industrial and basic material are next to each other? Let me go back 3 months. Let me see if they are next to each other. Technology's here, consumer discretionary is here. See how they're next to each other? They're always next to each other. So the fact that they're not next to each other is telling me that the market's fragmented. And typically when markets are fragmented, they need to pull back. And when the markets pull back, it'll recalibrate this whole large stocks versus small stocks. I got to show you this. You got to see this. I was showing this to my guys a few weeks ago. Look at the number. Look at how disproportionate the stock market is. The Nasdaq 100 top Nasdaq stocks, number of stocks trading above the 50-day moving average, 65%. Now look at the Nasdaq composite, 46%. Look again, 65%. So the Nasdaq 100 is still bullish. You got 65% of stocks trading above the 50-day moving average. On the Nasdaq composite is bearish. You got 46% of stocks trading above the 50-day moving average. So there is a huge, huge increase in prices of very, very high-priced stocks, FANG stocks, if you will. And then the rest of the market is pretty much doing this. And again, I'm trying to give you the best analysis possible. Now, typically when markets are choppy like this, like they've been for the last God knows how many months. Let's see here. When did it start? Started in April. Let's see. May, June, July, August. 4 months. When markets are choppy like this, pullbacks. You don't want to do breakouts because markets aren't as fluid. They're more choppy. So pullbacks give you that little, those little blips. So I've got 4 pullbacks for you. First one, Bristol-Myers, top stock, made a swing high, pulling back to the 50-day moving average. RSI not overbought. Ticker symbol BMY. Healthcare right now, pretty good with all of this crap with COVID. We've got INVH, Invitation Homes. It's a REIT for, I believe, apartment buildings or single-family residence. That's where you want to be, single-family residences in the United States. That's where you want to be, 29% return. The stock is looking revenue growth, 118%. Earnings per share, that's where you want to be right now. That's where you really, really want to be right now. And it's hitting the 50-day moving average. Bristol-Myers hitting the 50-day moving average. Next one, AMT, hitting the 50-day moving average, not overbought. And if you look at what the company does, you will see real estate investment trusts, communication develop multi-tenant communication real estate, networks for internet, cloud. What happens when we have a stay-at-home environment or when you need more servers for Zoom? They need a REIT to place their servers. Last, Molina Healthcare. REITs and healthcare, defensive REITs and healthcare. Don't be offensive and go for tech right now. Hitting the 50-day moving average after making swing high, not overbought. I like it. MOH, AMT, INVH, and BMY. And I've got something big for you, something important. Want an inside look at millionaire traders Lance Ippolito's newest venture? He's bringing together a small group of motivated traders looking to dominate the markets live every single week. And folks, Lance knows his stuff. He is really good. This guy's a tape reader. And let me be the first to tell you, these 60-minute trading sessions, they're on fire. They're explosive. Check out these gains, all while in the group. 22% on XOM, 23% on RBLX, 26% on SBLK, 26% on SSRM, 43% on TPGY, 73% on MUDS, all in these 60-minute sessions. Can you imagine making 73% in an hour, 43% in an hour? Folks, these are on fire. Hell, I'm going to start attending these sessions. I want to check out opportunities like this. Folks, opportunities like this don't come often. And folks, they're only available for a limited time. And Lance is on fire. Click the link below to get in on the action and start collecting profits like this. Don't you want to know how to collect profits like this? Lance's room is on fire. And Lance is smoking hot with this. You got to check this out. And folks, before I let you go, click the link below. Check out what all the action's about and all the talk's about on Wall Street. Everybody wants in on Lance's room. You got to gain an unfair advantage, especially in this choppy market. These are some mind-blowing gains. Make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post my next video for you. Don't you want in on this? Of course you do. I'll talk to you guys later. Have a great day. Bye.